Hey everyone, welcome back to Tesla Daily. Today is March 27th, 2026, and we've got a lot to cover. Let's kick things off with Tesla's incredible innovations in the semi-truck space. It's exciting to see how they're pushing the boundaries of what's possible in the trucking industry. Now, there's some buzz about a potential merger between Tesla and SpaceX. Can you imagine the possibilities? We'll dive deeper into what that could mean for both companies. In other news, Elon Musk recently joined a call with Trump and Modi. It's always interesting to see how these conversations shape the future of our industry. Speaking of the future, we'll also touch on Tesla's upcoming vehicle plans. There's a lot in the pipeline, and it's thrilling to think about what's next. But let's not ignore the challenges. Tesla is facing some tough competition out there. It's a crowded market, and we need to stay realistic about the hurdles ahead. So, let's buckle up and explore these updates together. In a recent episode of Jay Leno's Garage, Tesla executives shared in-depth insights into the design and engineering of the Tesla Semi, highlighting its potential to transform the logistics industry. With a focus on electrification, the Tesla Semi aims to replace traditional diesel trucks, promising not only reduced emissions, but also lower shipping costs. The Tesla Semi boasts a unique cabin design, featuring a central driver's seat and dual screens for enhanced visibility and comfort. Its aerodynamic efficiency is impressive, with a coefficient of drag of 0.4, significantly lower than the typical 0.5 to 0.9 for conventional semi-trucks. This design allows the Semi to consume less energy, particularly on long hauls across varied terrains. Key engineering innovations include a fully electrically assisted steering system and a 48-volt battery architecture, which enhances efficiency and reduces the weight of the electrical system. The Semi is designed with multiple battery packs integrated into its chassis, allowing it to achieve a remarkable lifespan of up to 1 million miles. The battery is designed to last 1 million miles, said Dan Priestley, Tesla's Semi-program lead engineer, emphasizing the vehicle's longevity and durability. Charging capabilities are equally impressive, with the Semi able to charge at 1.2 megawatts, regaining 60% of its charge in just 30 minutes. This rapid charging is crucial for logistics companies that rely on quick turnaround times. Furthermore, the Semi's thermal management system, featuring a heat pump, ensures optimal battery performance even in extreme weather conditions. Tesla offers two variants of the Semi, with ranges of 325 miles and 500 miles, making it a versatile option for various logistics needs. As Tesla continues to innovate, the Semi is positioned to not only enhance the efficiency of freight transport, but also contribute significantly to the company's growth in the energy and infrastructure sector. With these advancements, Tesla is not just building vehicles, it's redefining the future of transportation. The Semi's introduction marks a pivotal moment in the shift towards sustainable logistics, and we eagerly await its impact on the industry. Here's the next update you should know. In a recent social media interaction, Tesla CEO Elon Musk stirred excitement by hinting at a new vehicle that he claims will be something way cooler than a minivan. This statement comes amidst ongoing challenges with the Cybertruck, which has seen a dramatic shift in demand and availability. Previously, Tesla offered extended test drives for the Cybertruck to help potential buyers acclimate to its unique design and features. However, the company has now limited these test drives to just 30 minutes, raising concerns about whether they can meet the growing demand for this unconventional vehicle. The Cybertruck, which launched with a base price of $59,990, has reportedly garnered over 1 million reservations, yet actual sales figures are believed to be under 100,000 units since production began in 2023. The recent cutback in test drives signals a potential supply constraint, as buyers have reported difficulties securing appointments, with some experiencing cancellations due to limited demo vehicle availability. This shift from a focus on customer experience to prioritizing sales raises questions about Tesla's strategy and customer trust. Musk's cryptic remarks about a new model have sparked speculation about a cyber SUV or a more spacious family vehicle, especially following the discontinuation of the Model S and X. While the idea of a new model excites many, Skeptics point out that Musk has previously teased similar concepts without follow-through. The automotive landscape is increasingly competitive, with Tesla facing pressure from emerging EV manufacturers, particularly in Europe and Asia. Despite the challenges, the potential for a new vehicle could reinvigorate interest in Tesla's lineup. As we look ahead, the success of this new model will depend on Tesla's ability to balance demand with customer experience, particularly as they transition from a vehicle manufacturer to a broader technology and service provider. The long-term outlook remains cautiously optimistic, but the execution will be crucial in maintaining Tesla's position in the market. In summary, while Musk's hints at a new model could signal exciting developments for Tesla, the company must navigate current demand challenges and ensure a positive customer experience to sustain its growth trajectory. Here's the next update you should know. In a significant shift within the electric vehicle EV landscape, BYD has officially overtaken Tesla as the world's top seller of all-electric cars, marking a pivotal moment in the automotive industry. In 2025, BYD reported sales of 2.25 million battery electric vehicles, surpassing Tesla's 1.64 million deliveries by over 600,000 units. This represents a staggering 27.9% increase for BYD year-on-year, while Tesla's sales declined by approximately 9%. Despite BYD's impressive sales figures, the company faced its own challenges, with profits dropping 19% to 32.6 billion yuan, $4.4 billion, due to intense competition and a price war in China. Revenue, however, rose modestly by 3.5% to 804 billion yuan, $116 billion, indicating that while sales volumes are high, profitability is under pressure. Tesla's financial performance has also been troubling. The company reported its first annual revenue decline, with total revenue from car sales falling 11% year-on-year, resulting in a profit of just $3.8 billion. This decline is compounded by a 60% drop in sales in Canada, where BYD is aggressively expanding its market presence. Tesla's market share in the US has also shrunk from over 75% in 2022 to less than 50% in 2024, highlighting the growing competition. In response to these challenges, Tesla is pivoting towards energy generation and software services, with a notable 25% increase in energy revenue to $3.84 billion in Q4 2025. The company is also expanding its full self-driving FSD subscription service, which saw a 38% year-on-year growth, indicating a strategic shift towards software monetization. Looking ahead, both companies face uncertain futures. BYD is betting on new technology, including its fast-charging Blade Battery 2.0 system, while Tesla is ramping up production of its Cybercab and expanding its robotaxi service. As the EV market continues to evolve, the competition between these two giants will be critical to watch. In summary, while BYD has claimed the crown for now, Tesla's strategic investments in software and energy solutions could reshape its market position in the long run. The race for EV dominance is far from over, and we will need to keep a close eye on how both companies navigate the shifting landscape. Now, let's shift to the next story. In a bold prediction that has captured the attention of investors and tech enthusiasts alike, Wedbush analyst Dan Ives has reiterated his belief that Tesla and SpaceX will merge by 2027. This forecast comes on the heels of significant developments linking the two companies, including Tesla's $2 billion investment in xAI, which has now been converted into a stake in SpaceX following its acquisition of the AI startup. The merger, Ives argues, is not just a distant possibility, but a logical next step, fueled by shared ambitions in artificial intelligence and operational synergies. The recent announcement of a joint facility, dubbed Terafab, in Austin, Texas, further solidifies this connection. This facility will house two advanced chip factories, one dedicated to Tesla's AI needs for its vehicles and Optimus robots, and the other aimed at creating space-based data centers. Ives describes this collaboration as the first step toward full operational integration between the two companies. As we look ahead, SpaceX is preparing for a highly anticipated IPO, expected to raise approximately $75 billion at a valuation of around $1.75 trillion. This influx of capital could significantly accelerate both companies' projects, including Tesla's ambitions in autonomous driving and robotics. Ives maintains an outperform rating on Tesla with a price target of $600, suggesting substantial upside potential from current trading levels. However, challenges remain. Regulatory hurdles from the FTC and DOJ could complicate the merger process, and shareholder approvals from both companies will be necessary. Despite these obstacles, the integration of Tesla and SpaceX could redefine the landscape of technology, combining electric vehicles, robotics, and satellite services into a singular powerhouse. In the meantime, Tesla's stock has seen fluctuations, recently falling about 2% amid mixed analyst sentiments. While some analysts remain bullish, others express caution, highlighting ongoing investigations into Tesla's full self-driving system. Nonetheless, the overarching narrative is one of growth and potential, as the merger could represent a significant leap forward in both automotive and aerospace industries. As we navigate these developments, the future looks promising for Tesla and SpaceX, with the potential merger poised to create a formidable entity that could lead the charge in AI and space exploration. Here's the next update you should know. In an unprecedented move, Elon Musk participated in a phone call this week between President Donald Trump and Indian Prime Minister Narendra Modi, focusing on the escalating conflict in Iran. This unusual inclusion of a private citizen in such a sensitive diplomatic discussion raises eyebrows and questions about Musk's growing geopolitical influence. The call, reported by the New York Times, centered on the critical situation in the Strait of Hormuz, a vital global energy choke point. With tensions rising, Modi emphasized the importance of keeping this strategic waterway open, stating, "Ensuring that the Strait of Hormuz remains open, secure, and accessible is essential for the whole world." Musk's presence on the call is particularly noteworthy given his lack of an official government role, and it suggests a potential thaw in his previously strained relationship with Trump. The two had a fallout last summer, but recent developments indicate they may be mending fences. According to reports, Musk's business interests intersect with the regions affected by the crisis, including his ventures in space and energy. While the exact nature of Musk's participation in the call remains unclear, whether he spoke or simply listened, his involvement has sparked speculation about his intentions and influence. The White House and Indian officials did not include Musk in their official readouts of the conversation, which further complicates the narrative surrounding his role. As global energy prices surge and supply chain disruptions loom, Musk's connection to state-owned investment entities in the Middle East, coupled with his business interests in India, could position him as a key player in navigating these turbulent waters. His companies, including Starlink, have already made significant inroads in India, and his ambitions for Tesla in the region are well documented. In the long term, Musk's participation in such high-level discussions could signal a shift in how private citizens engage with global diplomacy, especially as his businesses continue to expand into new markets. However, the implications of this involvement remain to be seen, particularly as geopolitical tensions escalate. In conclusion, while Musk's role in the Trump-Modi call is unconventional, it reflects the intertwining of business and politics in today's world, raising questions about the future of corporate influence in international relations. Next up, another key development. In recent developments, Tesla Inc. is facing significant scrutiny as the National Highway Traffic Safety Administration, NHTSA, escalates its investigation into the company's full self-driving FSD system. This investigation now encompasses approximately 3.2 million vehicles and has been upgraded to an engineering analysis, which involves detailed testing and analysis of Tesla's design decisions regarding its driver assistance technology. This regulatory challenge comes at a time when Tesla's stock is trading at $372.11, with analysts from Wedbush maintaining an outperform rating and setting a price target of $600. However, the stock is considered overvalued relative to its fair value estimate, with a P/E ratio of 345.54. California Governor Gavin Newsom has publicly expressed his disappointment in Elon Musk, calling him one of the most disruptive figures in the industry. Next up, another key development. Tesla's stock has recently taken a hit, declining approximately 3% in trading, as fears over vehicle deliveries overshadow excitement surrounding its upcoming Cybercab and SpaceX IPO. The stock, which opened at $372.11, fell to around $361, marking a 20% drop year-to-date, despite a 32% gain over the past year. Analysts are particularly concerned about the upcoming Q1 2026 delivery report, with projections suggesting deliveries will fall short of expectations. RBC Capital anticipates 367,000 units, slightly below the consensus of 370,000, following a troubling trend where Tesla's total vehicle deliveries dropped 8.6% in 2025, the first annual decline in the company's history. Adding to the pressure, the National Highway Traffic Safety Administration (NHTSA) has escalated its investigation into Tesla's full self-driving. Here's the next update you should know. In a series of recent legal developments, Elon Musk has faced notable setbacks that could impact his business ventures, particularly Tesla. A federal judge dismissed Musk's antitrust lawsuit against major advertisers, including Colgate and CVS, which he accused of colluding to boycott his social media platform, X. U.S. District Judge Jane Boyle ruled that Musk's claims lacked sufficient evidence of harm, stating, "The very nature of the alleged conspiracy does not state an antitrust claim, and the court therefore has no qualm dismissing with prejudice." Additionally, Musk's demand for a Delaware judge's recusal from ongoing Tesla lawsuits has added to the tension. Musk's legal team argued that Judge Kathleen McCormick demonstrated bias by liking anti-Musk posts on social media. And that wraps up today's update. Thank you for joining us here at Tesla Daily Insights. We appreciate your support and enthusiasm. We'll catch up again soon with more exciting news and updates. Until then, take care.